Hey guys, so today is Tuesday. We still have a no news day basically, so no news today, and we are right in advance of CPI. So tomorrow, Wednesday, we have CPI. Actually, therefore, we can expect that today is a more difficult day. Still, we had actually quite a clean draw for price, but it was kind of difficult to frame a bias first. That's the trades I took today, so there are definitely some losses today as well. But I ended up in the green and also learned something new, or definitely also something I could have done better. But first, before we go into the execution down here, I want to just talk about basically today's daily or higher time frame conditions. So still not the best daily conditions. Why? Because we wicked lower, swept the daily sales liquidity, but we are now once again back into the range. It looks like right now that we are able to expand higher from here because we have a really bullish reaction from it, and just we trade aggressively higher. So eventually we could even start trading higher from here. To me, it is not really the best looking setup in here to look for higher prices, because we still have, in my opinion, unfinished business down here. So I don't know how much higher we would trade, or if we just take out the high once again or consolidate and then trade lower. I don't know, we have to see. Maybe tomorrow already we just explore to the downside. You can't really say that right now with the Middle East conditions and whatsoever. So let's drop to a hourly chart. Therefore, because we also do not really have a daily bias, we have to depend more on basically intraday liquidity. But what you can see right here is we had equal highs right here. We took already out with London, and from there on traded lower. Also yesterday, a really aggressive rally higher. So you can see down here we had the midnight opening price. We sold off within Asia, traded higher, and also now we are definitely still bullish. We already had many SMTs being in play in here, with the Dow Jones, for example. And also if you drop to the 50-minute chart, you will basically see why it was not the easiest day to have a bias, because we already took out basically buy sell liquidity right here with the high, and then we traded lower. And we also do have so we scrapped London lows, and already had the SMT in play. So in my opinion, if we have or if we are still in bullish conditions and we want to see that we trade higher, we actually should have or we need to have a market maker buy model being in play. So therefore that we do not take out New York open kill zone sales liquidity necessarily. And therefore, because we already did damage to the sell side down here, so basically with sweeping London lows, a market maker buy model is already in play and we can trade higher. But why was it also possible that we trade lower? First of all, because we already took out buy sell liquidity, and therefore we scrapped external buy sell liquidity. We do have relatively clean targets higher, so the buy sell liquidity right here, New York open kill zone buy sell liquidity, and also New York London highs, but only wicks. So as you can see, the bodies are still basically basically always below or beneath it. So therefore that's indicating strong bearishness in here. Also, as you can see, the reaction of the wick trading higher back to CE, and from there we sold off. That's a really strong bearish confirmation in that case. And also the fact that we have also relatively clean equal lows down here. So a SMT is already in play, yes, but that does not always necessarily mean that we do not trade lower from here, especially because we are still really over bought or had a really strong rally yesterday. So it could have been possible that we trade lower, take out the lows and trade higher from there, but the SMT basically hold it. Hold that's the right term. And so let's drop before that's the 5-minute chart. I think nothing special in here as well. but before we drop lower to the 1 minute chart, I want to show you regular trading hours, because today was quite interesting. Why? Because we have a really small new open range gap, so 27 handles. That's too small, so we can ignore the gap. But what we also do have is still, I think I have to delete some levels soon in here, but what I was basically looking at is the sales liquidity right here. And to me, I wanted to see that we trade lower, sweep the sales liquidity, and from there trade higher. That was basically what I was looking for. But as you see, so because you can also see my entries right here on the regular trading hours chart, I entered, so basically we scrapped the sales liquidity right here, and I was already looking for longs and got stopped, and that was a bit yet kind of confused me, or I don't know how I could express it differently, but in that case I just got basically stop rated, so not really much we could have done differently, but wait, yeah, so right here we are back to NQ. So let's talk about the executions. We also had a really clean balanced price range right here. Why? Because down close candle instantly followed by up close candles. Also took out not only London highs, but also we did have a short-term run on stop, so engineered liquidity, and from there trade higher. And that's what we want to see actually to stay intact, because we don't want to see that we necessarily take out the low right here. Because the market maker buy model should be in play already in here if you want to see higher prices, and because basically the high right here with the opening also did fall short of the New York Open Kill Zone buy liquidity. Therefore we can still anticipate that our market maker buy model did not play out already. If we would have scrapped New York Open Kill Zone buy liquidity already with the opening, then it would have been a bit different. Then we could expect a expansion to the downside, down to the Asia lows, for example. But yeah, so right here we are already after 10 a.m. To me, with sweeping basically the equal sales liquidity down here created within the opening as well is already enough manipulation to the downside, in my opinion. So therefore I was looking for longs. We tapped into the balanced price range and also scrapped on regular trading hours, as I showed you before. Once more to the chart right here, it's a bit more obvious. So we scrapped the sales liquidity right here already. So in that case we scrapped the not only the I would say opening sales liquidity, but also traded back into the, or swapped the regular trading hours sales liquidity I showed you, and traded into the balanced price range. And from there on we had a quite clean reaction. Also displacement in here, would have liked to see that we leave this gap open, also with the, or coupled with the bullish break right here, entered and got stopped. And that's a bit confusing to me because we are right here a bit late, so 10.7. We are still within our macro, yes, but I would have liked that we already expanded higher from here, and also knowingly that I don't want to see necessarily to sweep the New York Open Kill Zone sales liquidity, because then we kind of invalidate probably the market maker buy model, which would have been in play right here. And therefore I was actually leaning more bearish, looking for the Asia lows, for example, and an expansion to the downside, because also still expecting, or could have also expected that we see a really low resistance liquidity run to the downside as well, which followed after basically a low resistance liquidity run to the upside, and also because we have only a bullish delivery through the high time frame gap, through the liquidity void, we still miss out on a downside delivery to balance basically the high time frame gap in here. In my opinion, it's not a common approach, I think. But also with the fact that we swapped external buy sell liquidity, a market maker sell model could have been in play quite nicely in here, aligned with the high time frame. So I could have also seen a possibility that we would have expanded lower. But yeah, still, I got stopped basically right here. I was having a really tight stop, so I re-entered in here, and I think I closed it manually or I got stopped by my daily loss limit. But also with creating not only the SMT, the session the session SMT with New York Open Kill Zone was already in play before. So, but also now we found a short-term SMT, which is a really strong indication in that case that we are looking for higher prices. Then we basically really aggressively traded through the inversion favor gap, and I knew, okay, we would see now higher prices. My market maker buy model is still in play, and therefore I went long in here. Took my first partial right here within the CIBI, which is in my opinion, a really clean partial because we are above the CE level and approaching the upper quadrant. And I got stopped right here. I once again probably trailed my stop a bit too tight, but we also created SMT, and I wanted to mitigate my previous losses. I'm up green on the day, not a huge win, but a small win. Still, what I could have done better, so I mentioned before, is definitely the fact that if I do not really see a plus quality trade, which I know, okay, we are going now to expand higher. Sometimes I'm aware of the fact that eventually we will get basically short or stop rated in that case, so that we see one small manipulation to the downside. That's exactly what we see right here, also with the displacement lower. But in that case, it would have been ideal if I only trade with low risk, so the first entry basically with one partial. And if it's a win, I basically stop trading, and if it's a lose, I'm still able to take basically further trades, and I'm still not down too much. And because I'm really aware of the fact that we will expand. If it's lower or higher, sometimes I don't know. In that case, I was completely sure right here that we would expand higher. Therefore, I traded it as well with 2 contracts. But if the trades right here would have been only 1 contract, it would have been a way better, I don't know, Ausgangssituation. But yeah, so it would have been a better conditions for money management. I'm completely content with the first partial right here. In my opinion, could have been also above the highs right here, but you don't really know, so that's completely fine. Also had SMT with the highs right here already, so it looked like that, but I knew, okay, we would definitely see some higher prices, so I did not take a partial with the SMT right here. But I think what I definitely learned today was my stop loss placement. So in that case, definitely to close your position at your first presented favor gap is completely valid. But I was really convinced that we would take out the buy sell liquidity right here, and eventually even sweep New York Open Kill Zone buy sell liquidity. I did not expect it that we would even run higher and sweep London highs, because that's basically a protected high, a immediate term high. But yeah, in that case, if we already close above the first favor gap, we are trading higher. So I don't think that we are retracing from here, or basically starting a market maker sell model from here after we see such an aggressive expansion or displacement through the first favor gap. So therefore, I think the right approach would have been just to place my stop below CE of the order block, and I think with that I would have been break even on the day. With that I'm up on the day, but still missed out on on a lot. So just another 56 handles, I would say. So or even more, because I got stopped lower. So right here, 60 handles would have been still a really nice target to reach for, because in my opinion it's also kind of obvious that we trade back to it. And I think if we retrace, we do it definitely after we take out the equal highs right here, trade into the first favor gap, and from there on basically trade lower. We did have a SMT being in play. That's also why I traded my stop really tight. I think that's also valid, but in that case, I think it's just how we traded through the first favor gap. That's how it analyze that. So yeah, it's a tricky question, I think, how you manage your stop in here, but definitely could have yeah, just leave a bit wider range for my stop, and yeah, only traded with one contract in here if I'm not really completely sure about the yeah, buys. So I think if there are multiple buys in play, you should not trade. Sometimes a bit not easy because I was really or I had a strong conviction that we would expand. I don't know, but I think the draws for price were really clean, so we could have seen some really nice movements higher as we saw today, because we have such yeah, trend line buy sell liquidity, and also to target lower prices was completely valid because we had Asia lows and also just the low resistance liquidity down here, which we could have just dumped through. But yeah, I think that's basically it. So that's what I learned today. I'm content with the trade. A bit over traded in here, I have to admit. Sometimes it's better to, if we get stopped in here, to just relax, because if you look already for longs, then we probably should not look for shorts in here. Then we need a more clear bearish bias. But yeah, today was definitely a bit more a difficult day. Could have been expected with the day before CPI, but yeah, I really like the draw for price, the draw for price. Therefore I decided to trade, but I think you could have also really avoided today's trading day. Still, I really once again like the delivery and the draw for price, especially higher as we saw today. Quite clean price run. Hope you learned something new. Hope you enjoyed it, and safe trading. And that's basically it. Yeah, see you soon.